Should be on YouTube if you can post the link. And we'll start the meeting in 30 seconds. Sweet. All right, it's 10 after. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got a couple extra shorts on there. I'm short Apple, I'm short QQQ. Oh my God, did we do short selling today? Who would have thought? Let's take a look at it. Let's take a look at why. Let's take a look at this market. All this good stuff. Oh man, these SPYs are getting crazy. Where did we close today? SPYs up 0.3%. Q is relatively weak, down 0.25%. IWM relatively strong, up over just 0.5%. The move here is getting kind of crazy. This straight up vertical movement here in the SPYs. We're almost back to all-time highs in the SPYs, just like that. I mean, we were just bearish on the SPYs here in October, early October, late September, for the first time in a while, based on the break of our trend and really reversal of our trend on smaller and intermediate time frames, and then we reversed the reversal and continued the big picture time frame, which isn't that surprising. You know, if you're looking at different trends. And this is why the concept of time frame continuity is so important. It's one of our layers of probability. If you are looking at competing trends on competing time frames, the longer time frame usually beats the smaller time frame. So here in September, we were looking at definitely short-term downtrend and arguably an intermediate term downtrend. You could also make the argument that the intermediate trend was trendless at that point, but definitely no longer trending up. And a big picture trend that is still higher, as represented here by the slope of the 200 simple moving average, which is still pointed up. So if you have a smaller picture downtrend and a bigger picture uptrend, most of the time it's going to be the bigger picture trend that wins, and that seems to be the case here. But it's the degree of the move that's kind of mind-blowing. I mean, look, we were well positioned for it. I do think that there were signals in these 3-4 trading sessions when we pulled back and we made this pivot low here on October 13th that the market was different. One of those signals was that a lot of the more speculative names started holding up better and kind of catching bids even as the market showed that weakness. And I thought that that was a potential underlying signal that the market itself could become strong. Then we got this pivot. When this pivot happened here on October 13th, I thought that the highest probability situation was to build out a wedge, and I thought that that would have been great for the bulls if we built out a wedge, because we would not have been continuing the downtrend. We would have been getting to more neutral territory, more trend-less territory on those smaller intermediate time frames, and then maybe that could be a setup to break higher. That's what I thought was a more probable move. It's not what happened. What happened was just straight up. The next trading session, we broke that pivot high. The next trading session, we broke above the 445 area to become bullish again. The day after that, we gapped down, but it was a shallow gap that got bought all the way back up. Yesterday was a gap and go in extended territory, which is kind of crazy. And then today, we opened up like flat-ish, up very small. And the SPYs really were able to continue this upside grind and consolidation. So it's really impressive just how strong this market is. We are extended. SPYs are at 452 right now. ADMA's at 445. Qs as well. Qs were relatively weak today, but the Qs were getting above this 374 level, which makes the NASDAQ become bullish again. So a high of 376.56 in the Qs is really impressive, and that is with the ADMA on that time frame being down at 369. So again, we have, even as of this closing price, we got about $6 of extension from the ADMA in the NASDAQ. The Russell, we had been saying, was the index that was really not extended coming into today, and that's due to the fact that it had about 4 days of relative weakness in here. But because it had been relatively strong overall since really mid-August, it was still kind of in bullish territory. So we really have the SPYs, the Qs, and the IWM all now coinciding together in bull territory. Things are looking good. And it was a decent day here for the IWM. It absolutely showed great relative strength compared to the NASDAQ today. All right, so as far as our big picture game plan goes for trading today, once again, we were really on point as a team. I love the teamwork that we're having. We recognize that because of this degree of extension, it was less is more, and we talked about possibly putting shorts on. Not just because of the degree of extension, but also, we look at flow, we look at sentiment. Pat has this beautiful morning note that he posts every day in the VTF. You should definitely read it. If you don't, you're missing out. He posted about 8:30 or so every day. It's got, just a whole ton of information in here every day. It tends to be all big picture type information. I read it every day. It's an important part of my research process, and I encourage you to do it as well. So we're really appreciative of Patrick's work. But a couple of things stood out. One was the short-term sentiment indicator was in the sell zone because of the degree of the move that we've had. This is the first time we've seen this in a long time. The entire summer, it hasn't even been in this red zone at all. So this is the first sell signal on the short-term sentiment indicator that we've had for a while. This thing does tend to be decently accurate most of the time, unless you're in like a real major market move. Like I'm sure that this was stuck in the buy zone for a while during the coronavirus crash, even as the market continued to go down. But this can be a useful tool. I wouldn't just blindly short because this is in the red zone, but when you implement this with other pieces of information, it's just an extra layer of probability. The medium-term sentiment indicator is not in the sell zone, but I thought it was noteworthy just the degree of the move that this has had in such a short period of time. This was in the buy zone here just earlier this month, and now worked its way up that far that fast. And then finally, the fear and greed index indicator, this had a big move over back into kind of that greed zone. So it's not so crazy where you got to get scared, but just a notable uptick here. So, paying attention to that, particularly paying attention to the short-term sentiment indicator in combination with our daily chart technicals and recognizing this degree of extension, we said to ourselves, well, where can the relative weakness come from, and what should we be doing from a big picture game planning perspective? And what I said in the morning meeting today, and I don't care that the SPYs were able to continue to go higher, I felt that if you were buying the SPYs, the Qs, or things that were highly correlated today, that it's an irresponsible buy. It gave us plenty of time to be able to get long things from a swing perspective that you should just be continuing to get paid on. And on a smaller time frame perspective, if you're coming in and you're buying anything that's this extended in the marketplace, it doesn't mean it can't work. And that's important to note. Can you buy stuff today and still get paid? Absolutely you could. Look at what the SPYs did. You bought the SPYs at the open, you caught a nice up move. But it's not a good risk reward, and it's definitely not a good probability of success to do that in the confines of this extension after this degree of movement. And that's what really matters, is are you putting yourself in the position to make money consistently in the long run? And I think if you're doing your buying there, that you're not. So what I really wanted to pay attention to was, based on this degree of extension, all the stuff that we just spoke about, can I actually do some short selling today? And I did, and I was able to do it, selectively. I had to be patient. It certainly wasn't easy, even with this degree of extension. But we saw, pretty early on, weakness in the NASDAQ, right? The NASDAQ pretty early became relatively weak once it broke this opening low, compared to like the IWM or the SPYs, and we know that they're extended on the daily chart. So that is what I was looking at here for a short. So I specifically went to the TQQQ here. I like this TQQ as a trading vehicle. It is leveraged, but it's also cheaper than the actual Qs. So it means that I can get good volatile movements, but also trade a product that's a little bit cheaper in terms of price, use a little bit less buying power in order to be able to do that. So it worked out really well. I mean, for me, at least partially, I'm able to give this a little bit more room because I do have a long portfolio of stocks that I'm in. So it lets me give this thing a little bit more breathing room. If the market is going higher, my longs are probably paying me. But like I've also said in the past, what I don't do anymore is I don't just blindly short as a hedge and just say, okay, good luck, because the market's extended and not have any stop losses on it. The way that I hedge, if you will, is by actually taking trades. So, you can see here, I started small. I said that, guys, I'm going to short the TQQ here small. Look to build in. I built in a little heavier. I built in a little bit heavier. I did not get stopped out here. I was given a little bit more room than that. I was given a little bit more space. I actually had an offer to short even more at 144.24. The high of the day is 144.22. So I didn't get filled on that perfectly. And then this kind of rollover happened, and we got paid. And then the bond auction happened at 1 o'clock today, which caused the TLT to sink, and it brought the Qs down further, brought the TQQ down further. And the impressive thing, to me, honestly, is that there was still no follow-through. We had this sell-off here. We had this snapback. I was looking for a lower high to come into the market, and it just never happened. We spent the whole rest of the day consolidating. And I really thought, the TLT maybe is a catalyst here that's going to give us a price correction just based on the extension on the daily chart in the market. And it didn't happen. So, good execution, good patience. I was able to still make, some decent money for myself in this TQQ. But I didn't get the follow-through I wanted, which I'm honestly fine with. Because that also means that my longs were able to hold up okay. We should keep in mind that those sentiment indicators, things like that, or this extension in the market, just from a technical perspective, it doesn't have to lead to down price action. A lot of the times it does lead to a technical pullback. It doesn't have to. You can still settle the overbought conditions of a market through a time correction where the market moves sideways. And at least so far here, it's just day one. That's kind of what I'm seeing with this market more than anything else, is the degree of strength here has been incredible. And at least so far for today, it's more of been a time correction than a price correction. So it's just super impressive. I also, under the same thought process, shorted Apple. We remember that Apple had a really big level at 150 back here in August. I remember these rejections, even back in July. This high was 150 on the dot. This was a little bit of a lower high, 149.83. It broke out but failed. It broke out but it failed. Then finally, here on August 30th, is when it had a real impressive breakout with continuation that led to an eventual failure also. But this failure was more caused by the market than anything else, and it was caused by I know Apple had an event that day. I can't remember exactly what that event was, but the market didn't like it. I don't remember if it was iPhone or what it was. But that's the event that caused Apple to fail. Maybe someone can remind me what this event was that caused it to fail. But the point is, we remember Apple 150 being a really big level. We know the NASDAQ is extended. We know Apple's extended. Apple's approaching $150 today with the ADMA at not even 146. So there's a large degree of extension there. So, I said to myself, let me short some stock in Apple versus 150. I was being patient on the buy. My game plan was actually to take a larger position, but tighter risk, just versus really that 150. Oh yeah, my bad. Sure, I don't know how that happened again. Here we go. I got to remember that when I'm sharing on YouTube, I got to not do full screen. So anyway, Apple here. Look, this sale at this price is luck. The fact that I got this fill, because this was a relatively large offer, and I got the fill at 149.74, like a penny off the high of the day. And I'll tell you what, I got lucky twice, because I originally was going to use that 150 kind of as my risk for stop, so I was taking like 26 cents worth of risk on this. When this worked to the degree that it worked, I lowered my stop to the high of the day. Well, guess what? I didn't get stopped out by 2 cents here. So I got lucky twice in Apple. And we definitely want to recognize the difference between luck and skill, right? I would give myself a little bit of credit and say that the short itself was skillful, recognizing all the things that we just spoke about, but the fact that I was able to get this exact price at basically the high with the amount of size that I got, and then the fact that I didn't get stopped out by 2 cents, that's a luck aspect. Apple does tend to trade clean, which is one of the things that I like about it. It tends to hold its technicals very clean. A lot of other stocks don't do that. So it's not surprising that Apple respected its high the way that it did, even by a couple of pennies. But there's definitely a luck factor involved there. The short sale, the covering, and kind of worked the trade a little bit. For the most part, I was holding, and then it closed so strong I couldn't even really keep much. So I got out of almost my entire Apple short position because the degree of strength into the close was so impressive. Like I said, this is becoming more of a potential time correction than a price correction, and I'm fine with that. Even this TQQ, I got out of some into the close, just because same thing. Like I caught a nice little move here, but it closed off its low. There was no lower high that came in. I'm keeping a little bit still because of the degree of extension in my long portfolio, but that that pretty much is it. That was kind of the thought process today. It was to do some short selling on the overextension. We also spoke about keeping an eye on the speculative names that we saw catch a bid yesterday. For the most part, they didn't really go today, and I'm not too surprised about that just because of what the market did. Like we were looking at, CGC had a big wake-up day yesterday. Tilray had a big wake-up day yesterday. Some of these other stocks had bullish price action coming into the close. You can see Root yesterday here at 3 o'clock catching that big bid, and NNDM gave a decent close. So we decided to put some of those names on the watch list, Wish being one of them as well. And the only one that really gave follow through was Wish. And I think it's notable though that Wish is the one that had the bullish option flow coming in. We had this list of speculative names that maybe woke up yesterday that we could keep an eye on for a long stay because they were not too extended as opposed to the market that's being really extended. And for the most part, none of them really triggered too well. But Wish was the one that we saw the option flow come in. So it's not surprising that that's the one that gave the follow through kind of to the next resistance level here at $6. So I know some of you guys were involved in that, which is fantastic. And I still think we keep an eye on some of these. Like I know Tilray had a nice little inside day today. DNA, which had a big day yesterday, had an inside day today. So I'm liking, this is exactly what we spoke about right in the morning meeting. Let's not buy the ones that had big days yesterday and are a little bit too extended. Let's let them reset up today, tomorrow, and they can maybe give us setups, a little bit later in the week. So hopefully DNA is doing that because this is one that I do want to be involved in. We had a great call out as a team here to come in and buy this on October 12th. You could have stock from under $10 and just be hanging out here at 15. Unfortunately, I don't have the position in it, even though it was my idea, I think. But this thing has potential to move higher, and there's a good possibility of a reset up there. All right, I'm going to answer questions. I just want to make note, I have a hard cutoff at 5 o'clock today. So 5 o'clock today is a hard cutoff. I will do as many questions as I can. Hopefully we get through all of them, but if I don't get through all of them, I have to stop at 5 o'clock, and maybe we could try to answer the question tomorrow. All right, so I'm scrolling back up here into the VTF. The first question I'm seeing is from Justin. What does impairment mean? I need the context around it. Usually it's a term used like in an earnings report. Is IBM getting smoked? Is that where it came from? What's IBM doing here after hours? Whew, IBM's getting wrecked. It's funny, IBM is one of the two stocks that almost always does the same thing every earnings report. Nike seems like it always goes up, and IBM seems like it always goes down. And IBM's down again today. But yeah, I would need some context on that one. Scrolling through. Yeah, Coin had a sick day today. It does trade with a correlation to crypto. I don't think it should, but it does. And just a huge 5-day move here in Coinbase. I still hate the company. But as far as your technicals go, this thing's in outer space. It's cleared your resistance levels. The only problem with Coinbase at this point is it's too extended. So just wait for it. Sock sales getting socked after hours. Yeah, coming down a little bit, which I'm glad about. I want to be back involved in this. I was in sock sell from this day here, I think from the 14th but I just took it as like a 2-day trade and got out, and it's just been continuing without me. So I want to be back involved in stock sale, but I'm not jumping into it yet. It was Warren Buffett scalping tomorrow morning. Oh, that was when, right, thanks guys. I asked if someone could remind me what the news event was that Apple sold off on. I couldn't remember, but it's when they lost the trial to Epic Games. That's what sunk the stock there a bit. Damien asking about CHPT. Yeah, so CHPT was the trade of the day for yesterday. So hopefully you're still in it from yesterday. I don't think there was anything to do today, and it's basically a perfect inside day to the penny on the upside. So I think you could watch CHPT for continuation tomorrow after today's rest. That's exactly what we want after our big day ones, is rest to set up for continuation. So CHPT is looking really solid. Let's keep it on the watch list. Rich is letting us know that Wish, which we spoke about today as a trade, is also having an inside week and up. So that's notable as well. Thanks for that, Rich. Next here is from B. Henry. Can you talk a little bit about VWAP? I noticed you don't have it. There were a lot of stocks under it today. Do I need to be real concerned about it? I know you said keep it simple. Sure, I can talk a little bit about VWAP. I have no issue with people who use it. Many traders on the team use it. I know Pat, I believe, uses it. I don't use it. I don't use VWAP. So, VWAP, what does it stand for? Volume weighted average price. VWAP is particularly important to sales traders. If you're an execution trader for a company, I know that Josh was even talking about an execution trader he knows who was buying on the VWAP yesterday. Earlier he was talking about it. That's very common, right? So the way that execution traders are oftentimes judged is based on how they were able to execute versus the VWAP. So let's say I told you that you had to buy 1 million shares of Wish today or something like that, and you're an execution trader. The way that they're going to judge if you did a good job or a bad job today is if your total buy order at the end of the day is better or worse than what the VWAP was. If you got a price lower than the VWAP on your 1 million shares on average, it means you're a good execution trader. And if you got a higher price than the VWAP, it means that you're not a good execution trader. So that's oftentimes the way in which they're judged. And it can be a self-fulfilling prophecy, just like how any moving average, sometimes you'll see a stock like riding a moving average perfectly. That's just because there's an algorithm that was turned on for that day that said buy on this moving average or buy on the VWAP, and that's how they're kind of working that order, very simply. I don't use VWAP. I don't get any value out of it. I don't believe that moving averages are support or resistance. I don't buy because a stock touches moving average. I don't use a stop loss at moving averages. All they are is squiggly lines. They are tools for me for other information. I use an 8 and 21 EMA on all of my charts, especially my execution charts. I also like looking at a 20, 50, and 200 SMA on larger time frames, also as a tool to tell me the essence of trend, right? Real quick, when I was doing the analysis of the SPYs earlier on the daily chart, how do I know that the essence of trend on the big picture is higher? Because the 200 days pointing up. That's it. So I don't use VWAP in my trading. I'm not against you using it. I don't need it as a tool for my trading. So that's the answer to that. Sebastian, can I check on Hood? What Hood is this? Sure. I love saying that. Yeah, Hood's looking a lot better for sure. There's a little bit on the radar yesterday. This $40 zone has been an important spot. I think it's starting to clear up above 42 area, which is some resistance. So it closed right at the 21, which is also coinciding with that 42 resistance. So we need this thing to have a big, nice wake-up day and really give you a good close above 42. But overall here, I would say that the price action is productive. Yeah, it didn't give any continuation today, but I would say that this price action is productive overall. Let's see if we can give you a close above 42 and start waking up again, clear some resistance levels. So that's it. Gabriel saying, if we own shares in Bullocks, they get converted to we. Yes. This is the first time I've ever done this too, Gabriel. I've never gone to bed with a position and woken up with a different symbol. So hopefully it's all properly located into our systems the next day for anyone who is swinging BowX. If it's not, you can reach out to the trade support team. But I already personally spoke to a member of the trade support team a little bit before I got on the radio into the close, just to confirm everything with him. And he said that the clearing firm and everybody, Sterling, are supposed to be aware that this is going to be a new symbol tomorrow. So hopefully your positions are properly in the system by 4 a.m. tomorrow. If they're not by 4, I would definitely expect that to be settled by the time the market actually opens. So yes, and if there's problems, just email tradedesk@t3trading.com. Soxel's getting smoked from the LRCX report is what Josh is saying, and that makes sense. It's down on its earnings. Steve is saying bad things here about Coinbase. They wanted to charge me $400 to purchase Bitcoin versus $75 to buy it on Coinbase Pro. Yeah, I mean, I've been saying this since the beginning. My thesis on Coinbase is bearish because the commission costs are absurd, and I think that this is going to end up having a race to the bottom in the same way that everything else does. But for now, it's trading with the correlation of crypto, and it caught a really big bid today. So, it is what it is. I still don't like the company. I'm not fundamentally bullish on it. Yes, CHPT had a rest day today. We discussed that already. Next from Sunny. Small caps are looking better than others. Fuel Cell, Jumai, QS. I agree. I don't buy positions into the close like that for tomorrow, but we want to be these names are on the radar, and we want to be paying attention to them for setups. This Fuel Cell now, 2 inside days in a row. This thing is now setting up for tomorrow's trading session, so we can watch that. I mentioned DNA setting up. I mentioned Tilray potentially setting up. QS also setting up. So there's a bunch of these names that are looking good here that we can be looking at tomorrow, especially as the market was able to rest a little bit today. We posted in the chat in real time. Wish when Jerry posted that it was waking up as it moved through the prior day high of 509. Yeah, for sure. Great communication here from the team. Jerry's been coming through with good ideas. Rich, you've always got great questions. Loving what we're doing here. Loving it. Absolutely loving it. I think I'm missing many opportunities if I wait for it. I'm only intraday 1 to 2 contracts. I'm sure that's a follow-up on what you said to me earlier. Oh, you were asking about VWAP. This is from B. Henry. Yeah, I'm struggling a little bit to understand your question, but basically what I would say is broadly, you want to focus on anticipating moves prior to their happening and not reacting to moves after they occur. That's my big problem. I know a lot of people ask me all the time, stock had a big move yesterday, they want to trade it today. No, you wanted to trade it yesterday. Yesterday it had a big move. Don't look at, and sure, stocks give day twos, maybe it gives 2 big moves in a row, but I think it's a mistake to look at something that had a big move yesterday, have that FOMO type of feeling, and then trade it the next day when you potentially have a worse risk reward and lower probability of success. Dylan here posting a link to a moving average class on YouTube that I posted. What do we got here? How to think about moving averages, 20, 50, 200 simple moving average. Okay, yeah, cool. Check this out, guys. Check out, the Derrick the Trader. Click on this subscribe button for me. We're trying to build up a little following, and I'm going to try to keep producing tidbits there for people. Next here is from ET's Mobile. I need help. My timing is off. Even though I tell myself every day not to chase, I do. Okay? I end up with bad pricing and losing money. And then I don't act when the setup is good because I'm down and scared. I can see the right things to do or not, but I keep making the same mistakes. Game plan, I need to share my trades here before trading. Yeah, ET for sure, man. I definitely would say do that. The community is here to help each other. So if you are sharing your trades prior to executing them, we can give you feedback on timing and thought process and things like that that can help you, be disciplined with your trading. This sounds like a combination of a game planning issue and a psychological issue. You have the FOMO that I was just kind of talking about. I was just talking about anticipate, don't react. And basically what you're describing here is that you're reacting and not anticipating. And that makes it more difficult. Especially in a market environment, as a market environment gets more difficult. I know I spoke about this a few weeks ago because the market environment in the summer and September was a little bit trickier. I think it's improved in October. As you have a market environment that's more difficult, it means that the market's less forgiving. It means that execution becomes even more important. When you have a really easy market environment like we had for periods of time in 2020, you can be late, you can have poor execution, you can still make money and think you're great at this. And then when things get tougher, that's kind of what separates the men from the boys or the women from the girls. So, it's an execution issue, it's a game plan issue, and it's a psychological issue. So how can we help? One, communicate your trades in the VTF for feedback so we can help. Two, you know what the right things are. You just got to do it. My kickboxing coach, back when I fought professionally, he used to tell me all the time in the corner, because in boxing and martial arts and kickboxing, your person in the corner is your second set of eyes, and he would tell me all the time, Derrick, I can tell you what the right thing to do is to knock this guy out, but I can't make you do it. You got to get out there, you got to do it yourself. And it's 100% true. We have all this great stuff in here where we're helping each other as a team, but you guys are still the ones that are executing on your own. So, focus on your game planning. Write down those game plans. If you see the stocks going without you, take a step back, go for a walk. My biggest weakness as a trader has always been my ability to control my emotions, even though it's something that I've improved on over time. I'm still not perfect at it, but there was a period of time when it was really bad, and I was really working on that. And one of the things that I would do is I would take a step back and go for a little walk. I'd go for a walk around the two buildings here down by our office. Short 5-10 minute walk, cool myself off, tell myself I just got to get up there and do the right things consistently, and then I would kind of go and do it. So ET, we're here to help. So just try to utilize us as best as you can, and just keeping journals and keep writing down your game plans. The journaling thing is so important too, because now the market is closed and you can go back and you can objectively analyze the things that you did well, the things that you did poorly, and a lot of those things are psychological. So that's it. So keep it up. Thanks, Mike. Scrolling through here. Next from Sebastian. Can you explain how to enter or what to look for in order to enter an opening trade that you miss in the first minutes? All right. It's one of those things where the first answer I got for you is not the answer that anybody ever wants. Don't miss it. That's the first answer I got for you. With that said, we all miss them, right? I miss things that are on my radar, unfortunately, all the time. Because I've got usually a big radar of new things I'm looking at for that day, and I'm also oftentimes managing 10 to 25 swing positions that are all having their craziest movements right as the market is actually opened. So the best thing to do is definitely just to not miss them. After that, it becomes more tricky. You got to ask yourself, am I still able? Did I miss it entirely? In which case, you got to move on, and that happens to me a lot. It's like, all right, I missed that opening move. I'm not chasing this at this terrible price. I hope people in the VTF caught it, because I didn't, and I'm just going to move on from this one. That certainly happens. Another situation is that you can watch for a new reset up, like a bull flag coming in. You get the momentum move and it flags out. The flag can be a new trade, a new execution for you. Or sometimes you get that huge initial momentum move and it has a pullback, and if the risk is appropriate on that pullback, you can pay up a little bit more risk-wise than you originally wanted to with a little bit less stock. The danger in doing that, and I do that myself sometimes, but I got to really love it in order to do that. The danger of doing that is if the trade fails, you're going to lose money on a trade that you shouldn't lose money in. Because if you executed well, and this goes back to ET's question about having good execution, if you executed well, then you caught the move. You already sold some. You already booked some profit. You already covered your risk. Now the trade fails. We never want our trades to fail, but it's no big deal at that point. You're not going to lose money. If you miss the opening move, you're buying that pullback, you have a worse risk reward, a lower probability of success. It doesn't mean that it can't work. It broke out for a reason. It's resetting up for a reason. But if that trade does fail, you're taking a loss on something that you shouldn't be taking a loss on. And that's why execution is key. So that's what I would say to you, Sebastian. I know it's not a great answer. Don't miss it. If you do miss it, maybe you can get a pullback, or maybe you can get a new setup to come in, like a 5-minute bull flag, something like that. Next here from DJ, hey, I'm fairly new and am trying to improve my stop placement. Great. Is there a common mistake you see new traders make with stops? I usually trade off of a 5-minute chart. No, this is a great question, DJ. These types of questions are very much encouraged. So a couple things here on stops. First of all, you want to try to choose the stop where this is from personal trading experiences, me talking personally here. You want to try to choose the stop where you know the idea is wrong, right? Oftentimes you'll see, all right, I could use this tighter technical stop, or I could use this looser technical stop. Which stop should I use? The question is, where do I know my idea is wrong? Because a lot of times that tighter technical stop, you won't know that the idea is wrong. And if you're getting stopped out, then you're going to fight the stock, and you don't want to fight stock. So I'm always wanting to use the initial stop where I know that my idea itself was wrong if I'm getting stopped out. That's one. Two, I hate, and I try to never do this. Every once in a while I do because the trade really calls for it. I really don't like using a stop loss where the stop is above the ADMA on the time frame that I'm executing on. So if you're utilizing a 5-minute chart, like you're saying here, first of all, you're utilizing a 5-minute chart, definitely make sure you're still paying attention to your daily chart, to your 15-minute chart, especially that daily chart, probably the most important one. Because even if you're just trading on a 5-minute chart, the daily chart's going to dictate the probability of success in many ways. And if you're using that stop loss that's on the 5-minute chart, you really want almost always the price of the ADMA to be at least, if not greater, than the price of your stop. If it's not, you have a much higher probability of getting shaken out of a trade that then actually will work. So, so that would kind of be my first real piece of advice. Every once in a while, because there's a really big gap or it's a momentum move, you're forced to have a stop loss that's above the ADMA on your time frame, but you really don't want to have to do that because you could get shaken out. Like, even I remember Baba yesterday, I know it didn't shake out, but like, if Baba had broken lows right here by a little bit and then this trade still worked out, that'd be so typical. Because if you were using this opening low as your stop and the ADMA hadn't caught up to it, it's very typical you could get stopped out and then the trade still works and it's just a shakeout. But if once the ADMA catches up to that price, you have so much more confidence in that stop. So sometimes what I do is I might use a much looser initial stop, like down to yesterday's high or something like that, with the expectation that I'm going to be able to raise the stop to an opening low with a good probability and probably relatively quickly. The problem is that sometimes it just will open up and go straight down and stop you out on the looser stop. So it means you can't take as much stock as you might want to unless you're utilizing that tighter stop. You also could use multiple stops. Like, you could say to yourself, you know what, I really wanted this Baba, but I don't want to get shaken out because this opening low stop is so high. So I'm going to use a smaller position that I'm going to give risk down to yesterday's high, and I'll take a bigger position that I'm going to keep tighter just to this low, recognizing if I get shaken out, I still have some of my position to make money on. If I don't get shaken out, I got an even bigger position to make a lot of money on. So I hope that helps, DJ. No problem, ET. Shane here, do you see a setup tomorrow on X? It's up 3 days in a row off lows. Some struggle at 2280-ish. Yeah, it's not too extended, so I would still pay attention to that area, like 2280 to 23 bucks for a breakout. Because it's 3 up days in a row, I would love for this to not break tomorrow and give a rest here. But it's also not too extended because it was coming from oversold territory pretty much 2 days ago at the lows. I like these names as a long. I like X. I like CLF. I like STLD. I know that stupid analyst just came in and downgraded the entire sector 2 days ago. Look what this STLD has done since then. I like these names. It's just a matter of the execution and the timing. Cliff 22, I like. US Steel, the level you just spoke about, I like. But I don't think I would take them short. And on the longs, I think I would just want to be a little bit more patient. So I like it. Wish setup very similar but different to AMD in the first week of October in here. Yeah, with this wake up. Where the inside day triggered an inside weaken up, and there's the wake up there. Yeah, here's your inside weaken up here in AMD. Cool. SOS is perking up after hours. All right, gang. It's 4:50. It looks like I got through the questions. Pat, I'm not missing anything from YouTube, am I? All right, cool. Looks like I got through the questions. Like I said, I got to run by 5 today, so it's beneficial for me to bounce even a couple minutes earlier than that. Loving the teamwork, guys. Loving the teamwork here. Pro Desk VTF is the truth. If you're on YouTube watching in, get involved. I'll see everybody tomorrow. Have a great night. And good luck if you're in BOEX.